Guys, it's another beautiful morning, and it is the time for the boom and crash trading strategy, spikes trading strategies. We started these few days ago, and of course I've been enjoying so many positive messages I've been getting from all my subscribers, because these are amazing results. Okay, so I'm really happy about this, that you guys are really taking advantage of this, and of course I will also continue from there. And of course today's zone is going to be in a different way, because we will be using stop loss to trail it right from one trend to another. Okay, that is how beautiful this is. It's going to be unique, and of course you're going to love every part of it. So just stay tuned and watch this video to the end, so that you will understand how to go about it. But before we go fully into it, in case you are joining us for the first time, I welcome you all to Qora Digital Cash. This is a platform which I used to share with you my ideas on how you can make some cool cash for yourself online, most especially within the Forex niche. All you need to do is just to take some time to browse through the channel, watch my training videos, practice and perfect your trading skill first on your demo account before trying them out on your real account. And if you love my videos, can you give me a thumbs up and share with families and friends? And if you are yet to subscribe to this channel, can you do so right away, so that you can be notified whenever I upload a training video like this. So quickly, let's go straight into what we are right here. So like I said earlier on, we will be checking out boom and crash spikes trading strategies for boom and crash, and of course we are looking at a different method today. So like I said, it is always important, if you have been following up with my videos on this particular topic, you will notice that it is always important that you know the right trend to trade this asset, this part of this asset. Okay, that is very, very important. If you don't know when it is spiking, or when you are to trade the spike, the right time to trade the spike, then you will be getting it wrong. Okay, and for each of them they have the right time. Okay, and of course for crash, it is when the market is on downtrend, while for boom it is when the market is on uptrend. So all these are very, very important. Okay, not until you are able to identify all these, then you might be having a big problem in trading them. Okay, that is very, very important. And for crash, spikes usually happen around the resistance zone, while for boom it usually happen around the support zone. So when the trend is in favor, then you take note of every support zone for boom. Okay, but for crash it's going to be all the resistance zone once you are in the right trend. That is very, very important. So quickly, let's take a look how we can milk the market with this strategy, which I will be revealing to you in this video. Okay, so quickly, let's see how we can go about it. This is boom 1000. You can trade it with boom, you can trade it with crash, and of course you can try as much as possible to be on 5-minute time frame. It will help you a lot. Okay, so this time around we will be using stop loss alongside with it. This is a major support zone, and of course the market turned from a downtrend into an uptrend around here. So let's say you come in around there where we have our entry point. Okay, this I'm going to change the color of this, or probably let me bring in another one. Okay, I'm going to change the color of this to white. Okay, let me change this to white. Okay, let's wait for that. Okay, let me change this to white, so that we will be able to differentiate between one color and the other. Okay, so this is it. Let's say this is our entry point. Okay, I'm going to bring in another one. Okay, and I will change the color of that to probably blue, or maybe I can also leave it at white. Sorry about that. Let me go back there again. Okay, let me leave this in blue. Okay, so let's see what will happen. Okay, let's say you decide to place your order right here, and it's spiked up. You know, this is 5-minute time frame. it spiked up to this level, okay, and of course because it is an uptrend, so you will experience more of spikes than the bearish candle around here. So it spikes up again. At this stage you can see you have a big margin between the entry point and the current action price. Okay, this is the current action price, which is the white color. The blue color is the entry point. Okay, that is where we place our order. So the next thing you should do is to divide this margin. Okay, you divide it into two. You know, this is the profits you are making at the moment. Okay, so just divide it into two and introduce your stop loss, okay, in the middle. Okay, you introduce your stop loss in the middle, which means if the price action, the current price action, should come down to your stop loss, even if it go below your stop loss and even your entry point order, so far it gets to your stop loss. Once it gets to your stop loss, it will take you out of the market with the rest of the profits between here, sorry, between your stop loss. Okay, it will close your markets, and the profit between your stop loss and your entry point will go straight into your balance. Okay, so that is one beautiful thing about it. And even if it should go beyond your entry point, you will have been taken away from the market right from when it gets to your stop loss. Okay, so as this is spiking up, you can see it kept on spiking up, keep increasing the profit margin. Okay, then it spiked up again, increase it again. Okay, you increase it again, then it got to this region and it started coming down and down, but it didn't get to your stop loss. Spiked up again, came down, spiked up again, came down, and spiked up again, came down. Then this time around spiked up till it got to this region. At this stage you can increase your the profit margin again, okay, in order to have more profit locked up for yourself. Okay, in case you don't know, guys, in case you don't know, the profit between this is your entry point, this is the current action price, so everything between your entry point and your action price is in profit. Okay, but the profits you are exposing to the market, you are risking to the market, is the one between your action price and your stop loss. So the one between your stop loss and your entry point is the one that is locked up for you. So if this action price gets to your stop loss or beyond your stop loss, then definitely once it gets to your stop loss, it will close your trade for you, and I'll have the profit between your stop loss and your current and your entry point, and have the profit between there in your balance. Okay, it will close for you in profit in your balance. Okay, and it will go straight to your balance. Okay, so that is how it works. So you can see this actually came down again and spiked up again, came down, spiked up and spiked up till it got to this level. At this stage I expect you to still adjust your stop loss again. Now start having more of the profits increase than start having the profit part, the one you are locking up for yourself. Make sure you have more margin around there than that of the one you are exposing to the market. Okay, so that is it. So you can see this came down again and of course spiked up. Immediately spiked up, you adjust your stop loss so that you have more profits locked up for yourself, and you have a few of the profit exposed to the market at this point, because the market is already getting to a major resistance zone. Okay, so which means anything can happen around there. So at this point you want more profit locked up for yourself, so in case it gets to your stop loss, it will close your trade for you, and of course you will be having more profits in your balance at that point. Okay, you can see it still came down but went up again and up, and at this stage I expect you to adjust your stop loss very close to your current action price. You can see you are now having more profit for yourself from here. This is your entry point and this is your stop loss. So this is in case anything happens and the market goes other way around, this is the profits you will be having in your balance. Okay, so that that is more than the one you are exposing to the market, far more than the one that you are exposing to the market. Okay, you can see how I started at the beginning. I divided it into two equal parts, then gradually I started locking up more profit than the amount that the amount of profit I'm exposing to the market. Okay, so that is it. You can see it came down again, spiked up till it got to this level. I will advise you to take it up again very close to the current action price, because it is already at a resistance. At this point you can even close the whole of your trade because it is already at a resistance level. Okay, major one at that matter. You don't know if it will break out above it, or probably it will pull back, or maybe it will change the direction of the market. But whichever one, in case it breaks out, in order for us to keep on milking the market, that is why we are still using the stop loss. But it does straight into your goes trend. Okay, so that is the beauty of the stop loss. You applying stop loss, you can see it came down and it's down at your close to your point, and of course it will have gone into your balance. So your profit that you locked up would have gone into your balance, and that is how you can use this strategy to milk the market for a very long time. You can use it to start the trend right from the beginning till the very end of the trend. That is how beautiful it is. So guys, I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are in the description box below this video, and if you are yet to subscribe, can you do so right away so that you can be notified whenever I upload a training video like this. So quickly, let's go straight